Hi everyone, hope you're all doing well. Today we've got a big video for you guys. I'm going to talk about some of my stocks, some stocks that are skyrocketing, my performance versus the S&P 500. Somebody asked about it in the comment section the other day and I thought, you know what, I've got a bit of free time, let's see how I'm doing with 3 months to go in the year and if we're beating the S&P 500. And then a lot of news stories, so you guys that like a lot of news stories in one video, we've got a little bit of S4 Capital, we've got a little bit of Nike stock, a little bit of FedEx stock. There's a lot coming up, guys. So I hope you enjoyed the video. If you could hit the like button, if you're new around here, subscribe. Get me to 16,000 subscribers and I'll drop a live Q&A session on Sunday, whenever that may be. Apart from that, let's get started. So what a day it was out there in the stock market yesterday. I think it was Luke on the Discord summed it up perfectly. Today, or yesterday, as I record this video, today is one of those days where you invest in the stock market for. Like, hopefully you guys were making money yesterday. I was making good money. I think a lot of people out there making good money. It's why you do it. You know, when it's one of those days where you look at the stock market account and you look at some of your stocks and you go, oh, that's a good feeling, isn't it? You know, you don't want to get too caught up in like day-to-day moments and movements, but it just felt good yesterday, didn't it? You know, you look at the S&P, it was a cracking day yesterday, up 1.7%. Year to date, the S&P is now up 20%. That is a very, very good year for the stock market and the S&P 500, which we'll actually talk about a little bit more in a bit more detail going forward. But yeah, really, really good. And most indexes, the S&P 500 back at 52-week highs, absolutely smashing it at the moment. Some also helped by some good job data out there. Looking at the top 5 holdings in the portfolio right now, DraftKings up at $39. Obviously entering the peak time Q3 season with the NFL coming up, hopefully that gets it back up to that $50 range. I think that's where it should be by the end of the year. I still look at DraftKings, that's only up 16% year to date compared to the S&P 500, and I think this stock is absolutely, you know, you look at analyst expectations at the start of the year to where they are at right now and the improvement, like at some point the share price has to follow that. And even though we're up 32%, I would expect to exit the year up more than that. I would expect to be up somewhere between the 40 to 50% range. It's been an okay year, but I would hope for it to start outperforming the S&P 500. And maybe with the NFL season coming up, that's the catalyst for it. Hims and Hers, you know, another fantastic year for this. We're up 155% on that one. My second biggest holding in the stock market. And yeah, that's actually starting to put a bit of a recovery in, which is nice to see from Hims and Hers. PayPal, even PayPal was kicking on a little bit. Last couple of days have been very good. Yesterday's been very good. One account, I'm up 3% on that position now. The other account, I'm up 30%. And that's the third largest holding. Maybe I should have put PayPal as the new biggest holding, but we'll see what goes on there. Fourth biggest holding, Google, up 43% on that one, 6% in the other account. That was the account that I sold my Starbucks. I told you guys Friday last week, I sold my Starbucks position and I cashed it into Google because the numbers looked very good at Google at the time. Quite a big buy. Maybe even, it probably would have been maybe even my biggest dollar amount that I ever bought in one stock at one time. I always wanted Google to be my largest position. It's still not there. It's still only my 4th largest position. But yeah, obviously that's doing quite well at the moment. But once again, another stock, you know, only 16% up year to date. You would, you know, when you look at Google and the numbers they're doing and the valuation, you know, who would have thought the S&P would be trading above where Google's currently valued? So I'd argue the case that this has underperformed the S&P 500 and maybe should be up a little bit more. Meta, another good year for Meta. I mean, up 61% year to date. My 4th largest position, up 155% and 227%. I actually still think the valuation is quite attractive on Meta. You know, when you look at the valuation, it's actually not too bad. And tied in 5th place is Meta, sorry. Google's the 4th largest. Meta tied in 5th place, and also Mercado Libre tied in 5th place, which is up 81%. And you know, I'm glad I was only buying this one again only like a month ago, and I'm glad I did because I looked at the numbers and I thought this is still quite undervalued here. And up 81% on that one. I always think, you know, should Mercado Libre have been a bigger position in the portfolio, but I always think about the political risk of where they operate and the currency fluctuations. But yeah, obviously still doing really well from there. But I look at the S&P 500 right now, and obviously a great year, 20%. And somebody asked me the other day, like, you know, how am I doing against the S&P 500 this year? And actually, I'm underperforming the S&P 500. I knew it was somewhere close, and when I was able to sit down and actually have a bit of time yesterday, I did one of those stupid things, you know, when you're like really tired. I've been absolutely knackered this week. I've not been feeling too well, and I got home from work, and you know, one of those things where you fall asleep straight from work. And well, you might not do it, but I sometimes do it. And I woke up again at like 7 p.m. or something, and you have like 3 hours sleep, and then by the time it gets to night time, like, and you go to bed, you just can't sleep because you've had like this 3 hour sleep. So I was there like at 1 a.m. like can't sleep, and I thought, you know what, let's do something that might tire me out. And I thought, let's see how I'm doing against the S&P 500, which, yeah, obviously 17.82%, which is okay. 17.82% is a decent return. It's definitely not terrible. Any other year, you'd say that that's a pretty good year. If you could get 17% every year in the stock market, you'd be quite happy. But we're obviously underperforming the S&P 500. And I guess that kind of comes down to the point of view is that the S&P's having a good year, probably a little bit too good of a year, because what has helped the S&P 500 this year is it's gone from metric expansion. It used to trade at 20 times earnings, 21 times earnings. It's now trading at 28 times earnings. So that's something that doesn't normally happen, that helps the S&P do very well this year. The other thing is when you look at like the weighting, you've got the likes of the big kind of Nvidias and the big likes of Broadcoms and all the AI booms that are kind of lifting the S&P up, maybe as a one-off year, so that makes it a little bit more trickier to beat the S&P 500. So there's a bit of me thinking, okay, I'm okay that I'm kind of underperforming this year. I mean, at the end of the day, it's only like 2-3%, and by the end of the year, there's a lot that can change. We still have a good 3 months here where these stocks are coming into the Q3 earnings, and it could really help them do very well. And the likes of DraftKings, which is underperforming the S&P, might end up, with the NFL season rallying. And that's probably going to be a key driver for me, is like some of these big stocks rallying into the end of the year and outperforming the S&P 500. When I look at, the history of the YouTube channel and my investing history, I've been investing in the stock market probably for like 8-9 years now. And every year I've beaten the S&P 500, apart from 2022. 2022 was an awful year. Obviously, as you guys know, we had a bad year. I think the S&P was down 13%. I think I was down like 30-something, 35% maybe that year. Obviously, there was a few bad stock picks that I personally made from the TTCFs and Beyond Meats, for example, and that absolutely killed me. Apart from that, we've been in a very good place, and even last year, I put this video out about my year-to-date return, which was double the S&P's return. And, a lot of that came down to DraftKings. DraftKings absolutely outperformed the market last year, and this year it's not outperforming the market, and that's probably the root cause. If DraftKings goes up to double now and returns like 32% this year or 40% this year, that's probably going to be the key driver for me outperforming the S&P 500. So that's the big thing with stock picking, is that when you have like a lot of heavy weight into these individual stocks, certain big holdings can dictate if you have a good year and a bad year, and DraftKings dictated that I had a good year last year. This year, not as so much, but that can all change. A good NFL season, good Q3 earnings, and we're back above it. If not, hey, it is what it is. We still had a good year. It would be disappointing to underperform the S&P 500. But I think I was listening on YouTube the other day to Paul Briscoe, who has come back on the YouTube scene and made a video the other day, and he made a really good. I listened to his video, and he made a really good point about trying to beat the S&P 500. Like, if you can't beat the S&P 500, you might as well just go buy the S&P 500 and stop doing individual stock picking. There's no point doing all this research and all these individual companies if you're not beating the S&P 500. But the hope is that even if you were kind of in line with the S&P 500 most years, if you do have that kind of 1 year where you do massively outperform the S&P 500, let's say you trade, let's say you have 4 years where you're about where the S&P 500 is, but then you have that 1 year that takes you massively above the S&P 500, let's say you double the S&P 500 returns, then does it, all make it worth it? And that's a good point. If you are able to have that one, if you do stay around the S&P 500, but you are able to have that 1 year where you potentially double the return, you have that one stock that goes absolutely ballistic and you do smash the S&P 500, even that's probably worth your time if you are able to achieve that. And I thought that's so true. You are waiting for that 1 year where you have that stock that absolutely goes ballistic, and it wakes up and it is worth doing those individual stock picking. And like that, the example of that is DraftKings for last year. For me, is like, last year got 39% year-to-date return. I doubled the S&P's return last year, and it all goes down to this guy. It had an amazing year last year, and that was because of DraftKings. This year, so. But if DraftKings was to go and have that kind of California state come online, then obviously that would be the key of how I would perform the S&P 500. I would expect DraftKings to crush it really. So yeah, really interesting thoughts. And overall, yeah, I thought I'd just share with you guys because somebody asked about it, and I thought I'd show you where I am. So yeah, it doesn't include dividends, even though even if we did include dividends, I don't think I'd be beating the S&P 500. But yeah, that's where I am with 3 months to go, and hopefully we have a strong end to the year, and that does get us above the S&P 500. So we will see how we do. Anyway, in other news, if you didn't come here for the talk about against the S&P 500, interest rates. So interest rates were held steady on the UK side of it yesterday. I was wondering if the US, because of the surprise 50 basis points, the UK would maybe flinch a little bit and go down. But they held steady. Seems like there's going to be another cut in November on the next meeting. So yeah, I think the UK rates need to be a little bit lower now because we do have a little bit of a weaker economy, and I think it'll be good for the economy, especially with all these people that have all these mortgages. And people say, well, if you can't afford it, then you shouldn't have got it. If you couldn't afford a 5% mortgage, then you shouldn't have bought it. But realistically, how many people thought we would go from those low interest rates to double what where we were at, and saw that kind of energy crisis that happened and that inflation happened? You got to have some sympathy with people. It's not supposed to be means tested, some of these mortgages, but I know people that have gone from mortgages of £400 go up to £800. It makes a big difference to people. When you're losing that £400 a month, would really help at the moment. Nike stock, what a jump this is having. Nike's up 7% in after hours or pre-market. And the news comes around is that they actually sacked their CEO. I actually was quite surprised, and then I forgot Nike actually changed their CEO in 2020. And I thought, oh, that's actually, there's a lot of CEOs that came in during 2019, 2020, and have stayed for that kind of 3-4 year mark. And I think what a lot of it is these CEOs come in, and I think sometimes if you were a bad CEO, you would have had a year and they would have booted you out and gone, this didn't work, and get the new one in. But I think a lot of companies are now trying to figure out that a lot of the CEOs that got in around the kind of COVID times, because they had so great numbers during 2020, 2021, and it wasn't maybe their influence, maybe they were just lucky. Basically everyone stayed at home. Everybody decided to get new activewear because they were at home and they wanted to treat themselves with maybe new gym clothes or something like that. They had all that free money. And I think a few companies are trying to figure out, is our CEO a good CEO? And was he the reason why we had such a big surge in sales? Or did he get a little bit lucky and now we're actually getting into normal times or even tougher times? And he's actually not performing that well, and then we get rid of him. I'm seeing a few of those, kind of COVID CEOs kind of getting a little bit of a shove at the moment. But yeah, obviously they got rid of the CEO. I mean, this is the trend at the moment, is that, you get rid of them and the stock goes up 7-8% after hours. I mean, as a CEO, if you were him, he would be absolutely gutted seeing the share price up that much because you got the sack. But obviously it's a trend at the moment. We saw it with Nike. I mean, not as big as a jump with Starbucks. When Starbucks got rid of their CEO, the stock went bananas when they got rid of their CEO. So yeah, we'll see what happens. Obviously, there's a few things that have gone wrong with Nike. They've lost market share. There's no doubt about it. They absolutely ruined their, the partnerships with businesses. They went for this crazy direct to consumer, pull back from other stores like Foot Locker, for example, and it really hurt the sales. And there's been a few big errors made, and hopefully the new CEO can turn it around for Nike. I've got to say though, guys, in my opinion, I still think Lululemon outperforms Nike in the next 5 years, and that's why I'm buying Lululemon over Nike. We'll see what happens, but it's going to be an interesting time. What did make me laugh is I with the jumps in Nike and Starbucks, I did think back to PayPal, and I thought about when Alex Chris came in, and I remember PayPal when Alex Chris came in. I'm sure the stock did nothing. In fact, I think the stock might have even gone slightly negative on the day when Alex Chris was brought in from PayPal. And it's funny seeing all these jumps from Starbucks when they get the new CEO, Nike when they get the new CEO, and then PayPal got their new CEO, and the stock really didn't do anything. But yet, you could argue the case that this was probably the best appointment out of them all. I looked at when Alex Chris came in. You look at what he did at Intuit, and you look straight away when he did his speech of this is what I'm going to do. I focus on small businesses. PayPal's lost the way with small businesses. We're going to get back to innovating and become the market leader. And now you're getting all these press releases where people are desperate to work with PayPal. You got Adyen come in and we want to work with you, PayPal, and it's a testament to how good Alex Chris is doing at PayPal. And I guess that's why suddenly now, I remember I used to get a lot of comments about PayPal, and it basically spent like a year and a half of like stuck in like the $50 range, and every time it like went up and up and up, it went back down again. And I remember like there was so many comments in the comment section like saying, "Oh, I'm fed up with PayPal. I've had it for a year. I've had it for a year and a half. It's absolutely nothing. I might sell it now." And obviously, you don't know when it's going to happen, but then all of a sudden you have that kind of month, and boom, it has a really big rally, and that's what's kind of going on with PayPal. But I just thought, this was probably the best appointment out of the all. I thought about Alex Chris and PayPal when the Nike CEO came in last night, and I thought it's funny how this one had no jump in the share price, and he's absolutely smashed it in the last 12 months, and he's probably like the best appointment out of them all, because his track record with Intuit was so good, and he was very clear on what he was going to do with the business, and it's rallying that much. S4 Capital, pretty bad day yesterday for S4 Capital. The stock was down nearly 6% on the share price. I'm actually going to cover this on the Patreon this weekend. I'm going to do a full review of Warpaint's earnings that had a very good earnings, and the stock did very well. And I'll also do a review of S4 Capital's earnings. So I'll have a look at this on the Patreon. Overall, I thought I'd just give my quick thoughts on YouTube as well, though, for some of you guys that want maybe a quick look at the earnings. And overall, my current thoughts with S4 Capital is it's not good. It's not good. I think S4 Capital could be on the chopping block next year. Obviously, it'll have tougher, easier comps next year because the numbers are so bad, and maybe that helps it. Maybe there's other things that kind of come in and help the stock. I do look at this and I think how a year ago, as Martin Sorrell didn't take the buyout offer for this, knowing that these numbers were coming. He should have took the buyout offer, in my opinion. But look at the numbers. I mean, there were some okay things. Operating losses was improved by 42%. So it's good that the losses are coming down, but still not great. The big thing that concerns me is that revenue downgrade. There's it's okay moving to profitability, but at some point you need the revenue to come back. And the big red flag for me is that you see in other companies now that are in this space are actually doing okay numbers, and they're still not doing okay numbers. That's the big red flag for me, that other competitors are actually starting to do okay now. So yeah, it's not good, and I think I can give S4 Capital maybe another 12 months maybe, but I'm getting a little concerned around it. So we'll go a little bit further to that on the Patreon. So if you do want to join the Patreon, links in the description, £5 a month. It's actually going to be going up at the end of the year. I think that the Patreon has been the same price now for 4 years, and I think some of the content on there is hopefully good, and I think I'm going to put the price up on that at the end of the year. So just a little shout out on that. I'll drop 2 exclusive videos this weekend on Patreon. FedEx came out their earnings. The stock is actually down 11% at the moment. The earnings were terrible. EPS was a pretty decent miss, as you see here. Revenue negative 0.5%, missed by 310 million. I'm sure there's probably some sort of pricing increase that is helping out a little bit there as well. So yeah, it's not good from FedEx. Obviously, we've seen UPS have a lot of weakness at the moment, and I don't know if UPS maybe could be an opportunity. I'll have to have a look in this kind of space. FedEx with a big miss. I think if anything, it's another sign. We talked about these Q2 earnings, and they've been terrible. There's no way around it. The Q2 earnings season was terrible. There's been so many companies with weak earnings, and even though a lot of analysts have downgraded the numbers, that's the good one point that does make me laugh, is that analysts can sometimes fudge the numbers. So analysts downgrade the numbers so much, and then the company beats it, and you go, oh look, everything's okay, it's beat it, and then you look at the comparisons, and then year over year it's down by X amount, revenue's down by X amount, and you go, yeah, it's so well and good beating it, but if you look from a year ago, the numbers are absolutely terrible. And you look, the same thing happens as well when analysts are upgrading. Analysts are upgrading a big amount. An example for this would be like DraftKings, for example. If you were to go at the start of the year, what some of these analysts were expecting in Q3, and they had them numbers, you'd go, wow, they're well ahead of where they expected at the start of the year. But because analysts are kind of moving the bar up and down a little bit, that's why obviously I never really focus on what analysts are saying. I always like year-on-year comparisons. And when you look at like year-on-year comparisons, then you go, wow, actually that kind of puts it into context how good it was or how bad it was. Not if they beat by 2 million or 3 million. And that's when you like look at FedEx, for example, and you got the EPS going from $4.23 down to $3.21. Your operating margin goes from 6.8 down to 5%. Your revenue goes from 21.7 billion down to 21.6 billion. They're terrible numbers, guys. And once again, it's like the canary in the coal mine. If you wanted any more evidence about weak earnings, the economy's getting weaker out there you go. The one that sends all the parcels, the one that manages all the e-commerce. Once again, weak numbers coming up. And if that would have been another example for me, like, I'm worried, guys. But because the Fed are actually realizing this, and we saw the big 50 basis points cut yesterday, it makes me a little bit more confident. Like, yeah, it's not good out there, but at least we know the cuts are coming, and hopefully that's kind of saves the day. But if it wasn't for the 50 basis points cut yesterday, it would be another example of, like, it's not good out there, guys. And it's another example of the economy is, in my opinion, it's weakening out there. If you went through Q2 earnings season, and like me, you read so many companies' earnings, you listen to so many conference calls, it was clear as day the economy's slowing down out there. But hopefully, now the cuts are getting a little bit more aggressive, it does save the day from what looks like a bit of a tough time out there. Anyway, that's the video for today, guys. Hope you enjoyed it. A lot of subjects talked about there today. If you could hit the like button. I will see you on Monday, unless you are on the Patreon. I'll see you on Saturday and Sunday for some exclusive content. And apart from that, hope you have a great weekend. See you in a bit.